Hey, this is Matt Cross from Alpha Male Secrets, and in tonight's coaching video, we are going to be talking about how to invest in the stock market for beginners. So all you guys who are brand new into investing, you don't own any stocks right now.
I do.
You don't know, sweet, you don't know what to buy. Tonight's coaching video, we're going to be talking about what stocks to buy, what stocks to own, and how you can get started even if you have very, very little money. Okay, I'm actually out here in Beverly Hills, California, out cruising around, out roaming around, doing some shopping and shooting these coaching videos for you. So let's go ahead and crack into tonight's coaching video, how to invest in the stock market. Let me give you my very, very basic, simple tips for investing in the stock market. Okay, when it comes to investing in the stock market, the biggest key is you don't want to overcomplicate things, okay? The last thing you want to do is you don't want to start obsessing over each individual stock. Okay, this is a beginner mistake that I see a lot of newbie investors make. They get involved in the stock market, and I did this too, okay? And I've been investing in the stock market since the late 90s, believe it or not. When I first got my first brokerage account, I had a little bit of money. I went into the stock market and I started investing right before the dot-com bust. I invested everything I had, which was $20,000. It was like my life savings. And I proceeded to lose my entire life savings within less than 12 months. Okay, I gambled on a few stocks that I thought were going to be big winners, and then I saw them dropping daily, and I panicked and I sold. And that's something that a lot of newbies do when they first get involved in the stock market, is they panic sell, right? As soon as they see a little dip by like 5% or 10%, they freak out and they panic sell. They get rid of all their stock. And then something odd happens right after they panic sell. Right? For you guys who have panic sold before, right after you panic sell, what happens the very next day? The market comes back up, and then your investment goes back to where it was, if not higher, and then you miss out on all that. And now you've lost money because you panic sold. So that is a big mistake that newbies make, that you don't want to make, is you don't want to panic sell. And in order to prevent yourself from panic selling, you don't want to obsess over any one individual stock. Also, you don't want to spend hours and hours, days and weeks researching any individual stocks. I'm just going to give you my own personal investing strategy that has not only saved me a ton of time, but a ton of research and effort, and has produced much greater returns. Right now, this year, I'm sitting at close to 20% returns on my money, which is insane. Because if you look at most savings accounts, I think the highest percentage you could get from a savings account right now is like 1% through Ally Bank. I don't even know if Ally Bank's still around, but last I checked, Ally Bank was offering 1%. Like, ooh, 1% of your money. So you put in $100 after a year, they'll give you back $1. But imagine you put that in the stock market, you pick the right stocks, and you get close to 20% returns. You put in $100, you get close to 20 bucks back, right? Obviously, before taxes. So another thing too, when it comes to taxes, is you don't want to sell within that 12-month period, because you'll be on the hook for 20% in tax, where if you hang on to it long term, I believe it's only 15% currently right now that you have to pay if you sell it after holding it for at least a year. So that's another bad thing about panic selling, is you sell within that 12-month period, and if you have any gains, you have to pay 20% tax on those gains, right? Not a good idea. When it comes to picking stocks, this is what I personally do. Okay, and again, I've been investing in the stock market for a long time now. I'm no expert by any means, but I was smart enough to get 20% returns on my money, or close to 20%. I don't want to say it's 20 exactly. It actually might even be more than 20 right now. But what I personally invest in are ETFs and dividend stocks, okay? So I want you to remember this, ETFs and dividend stocks. Do not ever buy a stock. I'm going to give you one tip right now. This is from Kevin O'Leary from Shark Tank. You guys who watch that show, Shark Tank on ABC. Never buy a stock that does not pay you a dividend, right? Because if you buy a stock that does not pay you a dividend, all it is really is a speculation. Okay, you're speculating that the price of this stock will go higher, and that's how you're going to get your money, right? Whereas if you buy a dividend stock, you could get a yield on your money every year on top of the growth, right? If the stock actually goes higher. I'll give you one example of a dividend stock. So I've got a dividend stock right now, say AT&T. AT&T is like one of my biggest holdings. And AT&T right now, it's not, I wouldn't consider it a growth stock, so it's not like going, right? But with AT&T, there's a 5% yield, right? So say you invest $1,000, right? You're gonna get 5% yield on that money. So you invest 100,000, you're basically gonna make 5,000 per year in dividends from that one stock alone by putting your money in AT&T rather than putting it into a bank, right? And the symbol for, by the way, for AT&T is just the letter T, right? Just the letter T. That's the ticker symbol for AT&T. So one of the dividend stocks that I'm holding right now, one of the biggest dividend stocks that is paying me 5% on my money is AT&T. Okay, am I expecting this stock to go to the moon? I don't know, but right now it's holding steady at where I bought it. So I'm not really gaining money, I'm not losing money from the stock price itself, but I am getting the dividends from it. So I'm getting that 5% yield on my money rather than putting it into you know, your standard savings account where you're only getting, you know, barely 1%. Does that make sense? So that's an example of a dividend stock. And AT&T is one of my favorite because they're a pretty solid company. They're gonna be around, okay? AT&T is gonna be around for a long time. They're not going anywhere anytime soon. You wanna be careful of dividend stocks where they're offering some insane yield, like 15% on your money, because when it's some insane yield like that, the companies are generally not very, they don't really have a historical track record established yet. So you wanna be careful of companies offering you these insane yields on your money. You know, you want to stick with these tried and true companies that have been around a long, long time. Like AT&T has been around decades, many, many years. They have millions of customers all around the world, and you're probably using them for your internet, maybe your cell phone. You're using AT&T service. So AT&T is a pretty safe company to invest your money in. They're not going to all of a sudden go bankrupt tomorrow. They're going to be around for a while. Great thing about AT&T also is they continue to raise their dividend. So they continue to raise that yield because they have lots of cash sitting around. They have lots of cash flow. They have lots of cash coming in, and they're constantly forming partnerships with other companies. They're buying out other companies. So AT&T is a pretty safe bet. It's a company I'm holding right now. Am I telling you to go out and buy AT&T? No, I'm not telling you to do that because I don't know what the FCC laws are. I'm just telling you AT&T is one of the companies that I'm holding, right? So when it comes to investing in the stock market, if you are going to buy a stock, you want to make sure you buy a stock that pays dividends, right? That offers a yield. Never buy a stock that does not pay you a dividend, period. Okay, and this is advice that you'll hear Kevin O'Leary from Shark Tank also repeat and tell you. Back in the old days, I used to buy companies that did not offer a dividend, and those companies, I lost my entire savings. Quick story, I remember back in 1999, I actually held Amazon, believe it or not. I had Amazon at, I want to say it was like $30 a share, either $15 or $30 a share. I bought it when it was like really, really cheap. And I held 1,000 shares of Amazon back then. Imagine what that would be worth today. I would literally have millions and millions of dollars sitting in my brokerage account. Instead, I panic sold. And you know, this was right when the dot-com bust was happening, so everybody was panic selling, and I was definitely one of those guys who panic sold all my shares of Amazon, and the rest is history, right? Now I'm out here doing coaching videos for you, teaching pickup and dating advice, talking to the ice cream guy. But the way you avoid panic selling is by actually picking stocks that you don't have to sit there and freak out about if they dip or if there's a pullback, or if there's a market correction. You don't have to sit there and like freak out like, oh, I gotta sell all my stock. You know, you don't have to do any of that. If anything, you just go in and you buy more when there's a dip, like I do. When I was first starting out with stock investing, whenever there was a dip or a correction, I would panic sell. Where now I'm smarter and you know, I have more money now. So whenever there's a dip or a pullback, I just buy more. Like I said, AT&T, like recently, AT&T dipped down to like $32 a share a few months back. I just bought more. I just bought more. I originally bought AT&T at I think it was like $37, $38 a share, and that's pretty much where it's sitting right now. It's been sitting at about 37, 38 for the last few months. It really doesn't go much higher than that or much lower. So you don't really buy a dividend stock like AT&T for growth, right? I'm not expecting AT&T to go to like $100 tomorrow. I mean, if it does, that's awesome, right? Awesome, beautiful. But if it doesn't, I don't care. Why? Because I'm still collecting that 5% juicy dividend on my money, that 5% interest on my money, just for keeping my money in there, as opposed to a bank like Wells Fargo or Chase or Bank of America, right? I'm getting that 5% yield on my money, and I don't have to worry about AT&T all of a sudden going bankrupt tomorrow. I mean, AT&T is a powerhouse, they're a strong company, and they're going to be around for many, many years, if not, many, many decades to come. So you don't have to worry about AT&T. Now, where you want to be careful with dividend stocks, like I was saying earlier, is you don't want to invest in dividend stocks that are paying these insane yields, like 15%. You might see some companies willing to pay 15 or 20% on your money if you invest in their company. And a lot of these companies are complete junk. A lot of these companies don't have any historical track record, much less any financial backing to suggest that they would have the money to pay 15 to 20% dividends, to pay that kind of insane yield. So I often wonder where some of these companies, like, as much as they throw out like, oh, we'll pay you 15 to 20% dividends if you invest in our company, I look at their financial reports and I look at how much money they're bringing in, and I'm like, how would they possibly be able to pay everybody 15 to 20%? That's impossible. Many times these companies all of a sudden disappear, right? They disappear because for whatever reason they go bankrupt and they have to shut their doors, and then there goes your money. Your money's gone, right? Because the company closed up. So any of these companies that you're considering investing in to try to get the dividend yield, make sure it's a solid company. Make sure they've been around for years and years. Make sure they have a viable product. Obviously, AT&T has many viable products. They're going to be around for many, many years, many decades. AT&T is not a company you're going to have to worry about shutting their doors tomorrow, right? You're going to continue to be able to collect that juicy 5% dividend yield on your money. So now that we've talked about dividend stocks, let's talk about the other type of stocks that I teach guys to invest in, especially if you're a newbie. You don't want to be obsessing over any individual company. Now, I mentioned AT&T, right? They're an individual company. You might be like, hey, they're an individual company. What about them? Do they count? It's like, well, AT&T is a dividend stock, right? So if it's a company that offers dividends, then different story. But if it's just a company that, I don't know, that doesn't offer a dividend, and you're just going to invest your money in it, and you're not going to get any return, you're just hoping for growth, not the way to go. Unless you want to spend hours each day doing research and looking at financial reports and trying to figure out which company where you should put your money in. I mean, this is a mistake that a lot of newbies make too, is they overanalyze the stock market and they make it more complex than it needs to be. And really, when it comes to stock market, aside from dividends, the only other type of stocks that you want to invest in are what are called ETFs. What does ETF stand for? It stands for Exchange Traded Fund, right? ETFs, Exchange Traded Fund. You want to invest your money in a solid ETF, like the S&P 500 as an ETF. Actually, I think they have a few of them. One of them that I'm familiar with is called SPDR, right? The ticker symbol is SPY, S-P-Y. I think right now it's sitting at about $275 a share. An ETF holds basically an asset collection, right? So let's take SPY, for example, SPDR, the ETF I'm mentioning. So this tracks the S&P 500, and they hold a number of companies in the S&P 500. And some of the ones that I can think of off the top of my head, they hold Apple, they hold Facebook, they hold Google. So for example, if you just invested in, say, Apple, and one day Apple crashes, you would lose all your money, right? But if you invest in Apple through an ETF, say SPY, right? Say SPDR, say you invest through SPDR, you not only hold Apple, Facebook, Google, and all these other top companies, but say Apple crashes one day, you're not going to lose all your money because you have all these other companies that ETF is invested in to keep it afloat, right? You got Facebook, Google. I mean, you're holding multiple companies in this one investment, right? In this one stock, right? Which again, we call an ETF. So you want to invest in dividend stocks and ETFs. Ideally, you don't want to invest in like 10 to 12 dividend stocks and 10 to 12 ETFs. You only want to pick a handful, right? And the reason why you only want to pick a handful is because you will obsess over watching this stuff. You don't want to have to be like spending your days like going on Google and searching each dividend stock and each ETF that you're currently holding, because it's a pain in the ass, and really you don't need to hold that many. I mean, the fewer the better. I mean, me personally, I hold under 5 stocks, and 5 stocks total, and this includes the dividend stocks and my ETFs, right? I'm holding a total of 5 stocks, and these stocks are bringing in up to 20% return per year for me. So don't obsess over this where you need to go out there and buy like a dozen ETFs and a dozen dividend stocks. You don't. You only need to pick like 1 or 2 dividend stocks and 1 or 2 ETFs that you want to invest your money in, and then let it ride. Stay in it for the long term. That's another thing, is I'm not a fan of short-term investing. I'm not a fan of like day trading or putting your money in and pulling it out. I mean, if you're going to invest your money, leave it in there for the long term, collect that dividend yield, let the money grow, even if it's in an ETF, right? Even if you got in an ETF, let your money grow. You don't have to pull it out like every second, okay? Because obviously, for me, I've got a business to run. I don't have time to be day trading. I don't have time to constantly check my stock account. I basically pick some dividend stocks and some ETFs that I could just put my money in and just let it ride. So that's all I have to say for tonight's coaching video. If you are going to invest in the stock market, then you want to buy dividend stocks and ETFs, right? That's all you want to focus on. Dividend stocks and ETFs. Just pick 2 dividend stocks you can invest in, 2 solid ones. I gave you one tonight, AT&T, and then you want to pick 2 ETFs that you can invest in, right? Exchange traded funds. And I gave you one of those again tonight as well, Spider, ticker symbol SPY, SPY. You can invest in that one if you like. There are others, you could do your own research, okay? But ETFs and dividend stocks are what you want to look for when you're investing your money in the stock market. You don't need hundreds of thousands of dollars or millions of dollars to invest in the stock market. I mean, you can invest with as little as $100. Okay, you can open up a brokerage account with E-Trade, Scottrade, which is, I think, was just recently bought by TD America. You can open a brokerage account with Schwab, Fidelity, that's another one, right? And put your money in there, and one day maybe you'll be able to get one of these Rolls Royces. This is a Rolls Royce Phantom, I believe. And you might move out here to Beverly Hills. So when it comes to investing in the stock market, don't overcomplicate it. Don't obsess over it. Don't overcomplicate it. Just do what I told you. Just look for a couple of dividend stocks you can invest in and a couple of ETFs. Put your money in there and let it ride. Don't day trade. Don't pull your money out. Don't panic sell. Just put it in 2 solid ETFs and 2 solid dividend stocks and just let it ride. Okay, you won't need to panic sell or freak out, even if there's a market correction or a pullback or a little dip temporarily when you're holding a solid company. For example, like AT&T, you won't have to worry about that. If anything, you'll want to buy even more. Like I mentioned that I did when it dropped to 32. I just bought more shares. I didn't freak out like, oh shit, I better get rid of this. No, I just bought more shares, and then sure enough, it went right back up to 37, 38 where it's been sitting. And still getting that juicy 5% yield on my money. By the way, you want to make sure that you subscribe to my channel for more coaching videos like this, where we're talking about how to invest your money, we're talking about how to invest in the stock market, we're talking about how to invest in cryptocurrency, but more importantly, we're also talking about how to become an alpha male in today's modern, feminized, emasculated, and pussified world, right? Talk about all this stuff. So you want to make sure you're subscribed to my channel, especially if you're a guy, especially if you're a man between the ages of 25 to 55. Definitely want to be subscribed to my channel. And in case I did not mention it, I'm going to be launching a premium Alpha Male Secrets channel, a premium content channel where I'm going to be sharing with you all of my premium coaching videos, all of my premium secret tips, tricks, and strategies for how to go out there and become a real alpha male in today's modernized, feminized, emasculated, pussified world. And again, we're gonna be talking about every aspect of being a man in today's modern world. We're gonna be talking about finances, fitness, health. We're gonna be talking about, obviously, investing like we were tonight, real estate investing, stock market investing, cryptocurrencies. We're gonna be talking about all that stuff, and I'm just gonna be giving it to you guys straight. I'm gonna be telling you exactly what I do myself, where I invest my money myself, and recently how I've been gaining up to 20% returns on my money, which is insane. I never thought that would have been possible. I'm gonna be sharing all these secrets with you right here on my Alpha Male Secrets channel, so you wanna make sure you're subscribed. You wanna make sure that if you want to be part of my premium channel, I'm only going to have 50 spots available. So if you want to get on my premium content channel, just click that link below in my description box and get on my email list. It takes 2 seconds, and that way you will be the first to be notified once I launch my premium content channel. We're going to be launching it very, very soon. I'm very, very excited about it, and I want you to be a part of it. And I'm going to do kind of a secret launch, so I'm not going to really mention it here on my channel. At least not that I know of, right? So it's gonna be, right now, it's gonna be a private launch. And in order to be part of that, you need to be on my email list. So if you're not on my email list yet, click that link below, get on my email list, and that way, again, you will be one of the first to know when I launch that premium content channel. Okay, and I want you to be there when I do. It's gonna be fun, it's gonna be exciting, and we're gonna be talking about all of these secret tips, tricks, and strategies for how to become a real alpha male in today's modernized, emasculated, pussified world. Okay, teaching you all of this stuff and much, much more. But you gotta be on my email list, so make sure you are.